Hi, my name is George Dagnino. I'm the editor of the Peter Dac Portfolio since 1977. The markets have been soaring since the end of December. What are the global markets telling us about the economy and the future? I'm going to show you a few charts, but the points I'm trying to make are the following. The business cycle is global. It's not US or Europe, it's global. All the major turning points in the stock markets are perfectly synchronized on the way up and on the way down. The turning points, the major turning points of the markets reflect business cycle turning points. People say that one should invest in foreign markets. However, hedging foreign markets involves currency risk. In other words, you have to hedge also the currency risk that you have. This is the way I show the business cycle, the economy growing strongly, then slows down, and then the slowdown continues, it grows below potential, then somehow finds the reason to start strengthening again. This is what's going on in US and it's going on in the foreign economies. What we are going through, and this is what I'd like to emphasize, is this period right now that is going from 2018 and is very similar to what happened from 2014 and 15. Let me show you why. This is the chart of the US S&P 500, and as you notice, this is going up strongly. It flattens out here, strong again, and it's flattening since 2018. This indicator shows that the slowdown in the market's strong, and then emphasize that there's a slowdown coming. The point, though, here is that during 2014-15, the market did not perform well. Now, this indicator is turning down, and the market in the US is not performing well in spite of the strong rally that we had in the last few weeks. This is the action of the European stock market in the same period. And as you can see here, 2014-15, the market performed poorly. We had the strong economy, strong recovery, global recovery. But then beginning in 2018, the market, European stock market, behaved even weaker than the US stock market. The indicators below show this ups and downs of the market. Notice that the turning points here in Europe is the same as the US, and the weakness in the market during the slowdown of 2014-15 is the same. China is not immune of the business cycle and the market cycle, if you wish. During 2014-15, it did not do much. It recovered with the global recovery, and then beginning in 2018, topped, and it now is having a correction. The indicator below reflects this slower growth, stronger growth, and possibly slower growth in the business cycle, and notice again how the Chinese stock market peaked exactly as the same time as Europe and as United States in 2018 and also in 2014-15. These are the chart of the emerging markets ETF, and again, 2014-15 weak economy. You see the market not acting well. Strong economy after 2016, peaked in 2018, going down. The indicator below follows this weaker economy, stronger economy, weaker economy, and stock market. Again, this peak is the same as what happened at the same time as in China, in Europe, in the United States, both in what happened in 2018 and also 2014-15. This is the stock market of South Korea, which gives an impression or gives information about the volume of trades, the global trade, since that country is particularly active in import and exports especially. But again, you see the market has not done anything until 2015. In 2016, there was the up global cycle, economic and also financial markets. But 2018 signals a slowdown in the stock market, and the weakness here reflected also in our indicator below. Again, the point that I'm trying to make here, which I promised I would make, that all the markets have the same major turning points in the stock market happen at the same time, and they all reflect this strong economy, weaker economy, stronger economy, weaker economy, because all these markets, what they follow is the growth in earnings. The Japanese stock market is no exception to the previous markets. No growth in 2014-15 because of the weak economic condition, strong 2016-17 because of the global expansion, and again, weakness since 2018. The indicator below reflects this trend: rising economy and stock markets, weaker economy, stock market, and earnings. So what are these charts telling you? Well, the way when I look at these charts is I always ask myself, what you really would like to see to invest. It's sure the market is up 10% in a few days, but what really would you like to see that tells you that the economy is expanding and the markets are growing because of stronger earnings ahead? Well, you would like to see exactly the opposite of what I showed you in the charts. Not all the markets turning down, but what you would like to see, all the markets turning up with the indicator in the lower panel turning up. Are we at that point? I don't know. I don't think so. I think it takes patience and discipline. But some people, I'm a friend of mine, say, George, I want to buy. This is a good rally. Maybe, but I think it takes some patience and let the markets tell you what is happening. Well, I hope you enjoyed this video. I'm going to prepare a new video based on profiting in bull or bear markets in my first book, which was a course I taught, an MBA course I taught, and McGraw-Hill Education asked me to write it, paid me to write it. Again, I know the question that is in your mind is what makes the business cycle turns up and turns down. It takes a bit all by itself to explain that. I also wrote 2 more books, which is a simplified version of this one, and really gives you some simple portfolios that one can use to invest, and have been back tested, so more or less they tell you what kind of returns you can expect with what kind of volatility and what kind of losses. I'm sure you will find them interesting. Please do buy them. Okay, thank you for listening. Bye-bye.